We've got a busy week ahead of us. This week is not really a big economic data day or week, but it definitely is a big Fed week, which arguably is just as potentially market moving. We've got Jackson Hole Symposium this week, which if we take a look at the full week here, we have the FOMC meeting minutes on Wednesday, and then we have the all-day event, Jackson Hole Symposium, and on day 2, we have Powell speaking. So, probably Friday is the big day here for the Fed stuff, but very likely to be a volatile week, especially the second half. Once you get into Wednesday, Thursday, Friday, you have the potential for some real serious moves. Gold is down here a little bit, guys. I'm actually watching this. This is what piqued my interest here this morning for possible buys on gold if we do get a bigger pullback. On the 4-hour chart, I like this level quite a bit. So if we do see a bit of a pullback, that looks interesting to me. And I believe the Edge Finder does have a bullish reading right now for gold still. Yep. The COT data still shows a lot of institutional buying on that front. Seasonally, it is still a positive month for gold for at least the next 10, 11 days. Trend to the upside still. Some of the economic data has been favoring and not favoring for gold out of the U.S. Like GDP statistics are pretty strong out of the U.S. That's not favorable towards gold. Remember, good economic data, not necessarily a great thing for gold. Gold can go up during a strong economic period, don't get me wrong, but it, generally speaking, just wants to see rate cuts. And rate cuts, for gold to go up on rate cuts, it also, weaker economic data leads to like faster rate cuts, which is really bullish for gold. MPMI, that's manufacturing PMIs, came in really weak. Services came in line. So we got kind of a mixed report. I do like gold on the long side. I'm looking for the pullback this week. If we can get it, I like that 50% retracement, which brings us right back to that previous all-time high, that level of resistance that we broke out of clean on Friday. If we're going to get a little bit of a, pullback here into that zone, I like that for possible longs here this week on gold. But we may have a little bit more room to squeeze lower. We haven't quite hit these levels here, but we'll see. It might just be so strong that it just shoots right back up and keeps going. We'll see. But for me, I like it on the long side. I'm only interested, though, if we get a nice, healthy retracement into that support level. I love your channel, man. It's awesome. Thank you very much. Thanks, Alex. Appreciate you. So we'll keep an eye on gold. The S&P 500 is also interesting to me. We are, in my view, likely headed for new highs. We will see if that's going to be a quick thing, if we're going to get good news this week. This has the potential, the S&P 500 has the potential to reach new highs this week off of the Fed meeting. If Powell comes out and he has just great news for us, we're going to cut rates. We see, we feel very successful in our process. Stock market's probably going to love that. If he comes in and says, we're going to roll back or we're going to slow down the pace of expected rate cuts, the economy looks too strong. If he says something that the market doesn't like, yeah, you could see a pretty quick pullback into, lower levels of support. These dotted lines that I've got marked out were pretty big breakout points, which I thought were pretty impressive on the way up. We really rallied hard on the S&P, and you've still got a lot of people, trading YouTube was very bearish on the stock market. I noticed a lot of creators that I followed were super bearish on this thing, but now people are starting to flip back to the bullish side. The reason I say that is because if you draw a fib from the swing high to the swing low of this move, we've pretty much crossed every defense level for the bears, right? The bears were strong here at the 38.2, but then bulls inevitably broke through that. Then we came up to the 50, no problem at all for the bulls. Then we came up to the 618, which was the big line in the sand for a lot of creators that I watch. And then we just blew through that. I mean, to be honest, as a bull myself, I was really shocked that we had so much strength for the S&P 500. But what this tells me is that this market is resilient. This market is strong. Price action is not messing around. It seems to want to keep going higher. We may get some pullbacks though this week. With the unexpected stuff going on with the Fed, I would not be surprised if we get some pullbacks on the S&P before we continue higher. My bias is I think we head to new highs. If I'm wrong about that, I will manage risk appropriately. But that's kind of what I'm thinking on that front.
This week, we're doing free access to the Edge Finder. If you're interested in our market scanning software and want to try it out for the week, listen up. At the top of the description and pinned in the comments down below, you can find the link to apply for free access to the Edge Finder for this week. Again, you get access for this week only, so try it out before it's too late.
Lines up nicely with the Edge Finder's confirmation signal here on gold. We also have euro and pound bullish signals on the Edge Finder as well. So we'll keep an eye on those. Also, by the way, guys, if you're enjoying the stream, do me a big favor. Hit the thumbs up button. It really helps just to support what we're trying to do here. Free, no nonsense trading content. If that is something you're down for, consider subscribing. If you're new, hit the thumbs up button just to support the stream. I really appreciate it. So where are we at? There's a lot of things that we can go through. Let's go through the commitment of traders data for a second. Let's talk about institutional money. Who doesn't love that topic? So if we take a look at the net positioning for the commitment of traders data, what this tells us is on a longer term basis where quote unquote smart money, institutional money is parked. Are they bullish on certain assets? Are they bearish? Right off the bat, for some reason, they are incredibly bearish on the Canadian dollar. They're also very bearish on the Swiss franc and 10-year treasury bonds, NZD, and AUD. So what this is showing us, guys, is that the ratio of long to short contracts traded on the futures market for the Canadian dollar futures, CHF futures, right? These are showing on the institutional money flow at the non-commercial COT data. I know this can be a little overwhelming at first, but the long story short is this is showing us what hedge funds and banks, what they're buying, what they're selling. This is what they're selling. This is more what they've been buying. Gold, oil, silver, the US dollar, the pound. These are your more bullish assets, right? Now, what I always like to preface this with, though, this component of the COT report is much more long-term natured. If you're a day trader or a scalper, you could pretty much rule this out. However, if you're a day trader, a scalper, or a short-term swing trader, highly recommend that you check this table out. This is the fun one. The latest weekly commitment of traders data filing will show us the latest buys, the latest sells. What is the, latest move that institutional money has been doing? For example, they bought the Japanese yen, more of it, right? They actually went long. They closed a lot of shorts. That was a very bullish week for the yen. US oil, they also closed some longs, but they closed a ton of shorts. That's pretty bullish. The US dollar, they added a lot of longs. Gold, they added a lot of longs. Very, very bullish institutional week last week for gold. Platinum, Bitcoin. So these are your more bullish week-to-week additions. And if we take a look at some of the more sell-side stuff, they sold the SPX, which is not great for my positioning. They sold the GBP, right? That's the British pound, the Dow Jones, the Nikkei. This is the US 30 or DJ 30 or DIA or YM. There's so many different symbols for the Dow Jones, depending on whether you trade futures or CFDs or Forex, whatever you trade. It's the Dow, right? The Dow, they sold a lot of Dow positioning. They decreased longs and they increased shorts. That's specifically what happened. The Russell, they also decreased a lot of longs on the Russell and they increased shorts. What's not napping, what's not sleeping is the markets. They're back awake. And we got Jackson Hole this week. So it's a big Fed meeting. Should go, Thursday. And really, we get the big part of it on Friday where we have Powell speaking. What are you looking at going into this week, Ivan? Are you watching US dollar crosses? Are you watching yen crosses? You watching gold, S&P 500? What are you looking at?
You should just call. Wait 2 seconds. Where is it? No. Yeah, there we go. So you can actually just call me the Yen Man from now.
That's your new name. We should just
Yeah.
change your first and last name legally to Yen Man.
Yeah. Nah, I'm looking to buy yen pairs this week.
Okay.
Probably around 22nd, 23rd, which is Thursday and Friday, around Jackson Hole. And on what 14th, I don't know what that day was that is Wednesday last week. I took profit on my yen pairs, and I said to the group, and I said, I'm taking some profits here because I'm anticipating a deeper fall, expecting yen pairs to come lower. And guess what happened?
It came lower.
It came lower.
So where are you looking to buy dollar yen? Are you looking, or are you already in a trade?
No, I'm not in a trade. I want it to come down to like dollar yen down to 144, 143, like that, whatever that thing is on the yen crosses. So euro yen is very high compared to that, but this might be the low, and I will just buy the higher low later. But I want this one to come lower.
Interesting. Yeah, and I just noticed something, Ivan. Check this out. On the dollar yen cross, this perfectly hit the 38.2% retracement, and that's where it rejected it. So does that signal to you that you are going to see the yen or the dollar yen move back down to, low 140s?
I'm on the opposite direction in terms of what I want to see. So I want to see down to 143, 144, 144, right? The pullback it made, I'm like, okay, it did what it did. Yeah, because this move here is so wild that I'm like, I just want to see the reversal before anything. So whatever that reversal is, and to be honest with you, it's kind of funny that dollar yen went higher, even though at the same time pound yen just went boom through the roof. So
yeah, that is interesting. The pound pairs have been kind of on a tear to the upside, right? Pound US dollar, pound yen. Do you know any of the dynamics there? What's causing all the pound strength?
Stronger fundamentals. I'm in how do I say it in English? In the world of a lot of lack of a lot of things, there are still some strong PMIs coming out of the services, at least for the UK. So it's just stronger than a euro. It's just stronger than the other ones. But also, to be honest with you, we are in a risk-off market. So risk-on, sorry. Why? So pound in itself, the reason why your trade is doing well is because of risk-on. So it makes sense that pound should go higher in that scenario.
Yeah, very, very much so. And I think that, if you're looking at the dollar this week, it's going to be very volatile because with the Jackson Hole Symposium, the idea that many are going to be looking for is whether or not the Fed is going to signal a 25 basis point cut, which is the expected in September, or if they're going to signal more than that, 50 basis points, or there is the possibility that they, surprise everybody with a more hawkish twist. If they point to all this economic data that's been really good recently as a threat, they might not like that. My base case, however, though, is I think that the Fed is now really looking at employment data, and they're saying, okay, that's showing signs of slowing and inflation is becoming less threatening. It's time to cut rates. And I think they'll probably signal 25, because if they signal 50, it might scare the market. But also, the Fed is well aware that, they don't want to reincite inflation back into the picture. They want to be careful. They want to start the process sooner and just go ahead and get that started. But what do you think? 25 basis point cut in September? Is there a possibility of 50? What are your thoughts?
I think the funny part is December. December market is priced in 1% by December, most likely 1% cut. So that is 4 cuts by December. That means that so we would have 3 meetings, so that needs to more than one meeting. Okay, one meeting needs to be 50 for that to be 100. So the market is pricing that in mostly for November. I think that's a bit crazy because that is so close to the election that I think we're actually gonna have a no meeting or nothing changed in November, and then in December, that's where the rate cuts comes in. So the thing that was a couple of days ago, I was thinking to myself, like, a week ago it was 50% chance of double cut, and I'm like, that's not going to happen. So I think that we're going to do 25 because we're tiptoeing in. Remember, we only have inflation at 2.9. We don't have inflation at 2.1. That would make it very much better, a much better deal to do double, because we really need to cut a lot fast. It's just something is in the right direction, and also again, it is from the cut. It takes 9 months or so until it's in the economy. So we are either very very late on the curve, or we're just starting, and we will never know until 9 months later.
Yeah, and that's true too with the the effects of rate cuts taking time. If we remember, guys, when we saw inflation go crazy in 2022, the Fed actually started raising rates pretty aggressively, but the effects took time to actually play out and actually affect the inflation statistics. So they started cutting rates, early 2022, but you can see inflation continued to go up for a while. So people are now seeing some early signs that the labor market is starting to slow, and so that effect is sort of a beginning. So we need to start the process of cutting rates sooner so that those effects will take place months from now. It really is I always hear 1 to 3 years for Fed interest rate changes to really take place, to really aggressively impact the market. And I heard something too where I think right now we are at one of the most restrictive real interest rate levels that we've had in a number of years. So I think the Fed feels the pressure to cut rates. There is the possibility that they go 50 basis points, but if they do it, I think that they will do it as gracefully as possible, meaning like there's a possibility they cut 50 basis points in September and they say like, we feel sufficiently, happy with where everything is at. We just think that we're very restrictive and we can take off some restriction here. And we don't think it's, it's definitely like if they signal that it's not like a threatening rate cut, the market still may freak out, but there's a possibility they could thread that needle and actually do it correctly. You see what I'm saying?
Yeah, I just want to reiterate, that's the word, on your statistics. You said what in 2022?
They hiked rates?
They started in 2022, yeah?
Mm-hmm.
Because inflation started in May, June 21.
Yep.
So it took them, is it 9 months? I don't know. It took them 9 months up to March until they started doing something. So they were really, really, really late from when inflation went beyond 3%. And by the time they started cutting, and started increasing interest rates, the inflation was already 5 or 6% or so.
Yeah, no, that's a really good point too. And like, the Fed may not want to repeat that mistake of waiting too long. And that's where I keep hearing people saying, the Fed needs to be, yes, data dependent, but sort of move quickly rather than slowly, right? So the thing about data dependency that's tricky is data dependency is also subjective, because data dependency right now, if the Fed wants to be more hawkish, they could just say, well, inflation's not at our 2% target and be more hawkish. If they want to be data dependent and they want to be more dovish, then they could just say, well, the labor market's showing signs of cooling. So this data dependency thing is it's a house of cards, in my opinion. Like you've got to just make a stand. You've got all the smart economists of the world in one team there at the Fed. I think that the call probably, I'm not a Fed economist, but I think that there's a good argument to be made that, the rate cut process needs to happen sooner and quicker so that the effects, don't lag behind the negative things that are going on, right? The labor market, as you just mentioned, they waited very, very long to really get in front of inflation. They just kept saying it was transitory, and it was just going up and up and up, trying to be cheeky with it, and it led to 9% inflation, which was rough. So, anyways, something to think about.
It's always something to think about, but in my slow motion going quickly, Fed isn't going to be the one that is going to be like we're going to be the first. They should be, and they have been the first one to rate cut, and everyone else follows, because there's a lot of I'm not going to go into it a lot, but there's a lot of itty bitty what do you call it? A lot of money being transacted behind the scenes as of bonds in between governments. That is a lot of money. That also goes into, because in Norway, little Norway with only 5 million people, we are here wondering, when is the Fed going to cut? Wondering, why does Norway wondering about Fed cutting? It's because we have bonds. We have treasury bonds that we have. So we can't just cut here because, that would make our inflation go higher.
Yep.
So people are waiting for Fed to do it.
And I think on a bigger scale too, just central banks across the whole world, they all kind of move together. They all tend to follow the Fed, but what is happening with the Bank of England also matters. Bank of Canada, they all kind of move together.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button, or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.